All right, team. So now is the most important question, how to enter a trade. So there's definitely many ways that you can enter a trade. We're going to go over a very basic technique, which you've actually been learning along the way, which is just utilizing market structure. I personally am a retest trader. And what that means is whenever there's a break of structure, I like to see the market come back to that structure and either land on top or below, depending on the direction, to help confirm that it's going to go in a direction that I anticipate. So you can see here we're with Euro USD, and I'm going to give you some examples. You might be asking why I keep using Euro USD. I literally I've been using the New York session pairs because a lot of people, this is actually just a good pair for beginners. I mean, that's all I can say, but you should be able to trade anything. Some pairs do have higher volatility and more movements, so you definitely want to be careful, but this one's good for beginners. Also USD JPY. I like GBP USD, it's not a bad one. And you'll notice that some of them move in the same direction, which is like a positive correlation, and some of them move in an opposite direction, which is called a negative correlation. And that is something we do cover in my course, in the advanced course. But for now, let's just focus on entry. Now, you've already learned when you have a trend line, you want to get in when it comes back and lands on top of that trend line. And anytime you see some type of rejection with your candles, wicks are always a good sign, especially like this, if it's for a buy. And for a sell, you want to see those wicks on the top. You see, like right here, bam, down. So, how do you enter? Well, it's very simple. Number one, you definitely want to have your key levels drawn. So let's just draw some key levels real quick. And if you have to watch this video 20 times, watch it 20 times. It is going to register. Let's put the line chart, and we're going to look for two basically pullbacks down and two above. So we have one area here that the market likes, and I'm just going to use this recent one right here. And then below, I see there's one right here, so we can see, and I'm going to probably adjust these a little bit more. And you're trying to get as many touches as possible without, you want to see the respect. You want to see the market respect the trend line. So I'm just going to do this real quick. Let's put some candles and make some adjustments. All right. So this one's just too close, but this one's okay. This one's okay. And this one's all right. Okay. So here's what this means. Actually, I need to do another one on top just in case. So we're just going to use the higher one because this one was too close. So I'm just going to use this high peak. So we know this is an all-time high recently for the 4-hour. Okay, this is very important. You want to notate. It's like the highest high just right here in the screen that we have. I'm not scrolling all the way back. You just need to make sure you understand that. So the goal is, and you can see here just by watching this, the market breaks out, lands on top, breaks out, lands on top, breaks out, was unable to land on top. Now, if you're looking for a buy, which is what we have here, you can, use what I've taught you to help provide some confluence, which is confirmations, and we'll discuss that. But what you're looking for is for your level to be broken so you can get in on the retest, okay, or the pullback or the retracement. They're all the same thing. They all mean the same thing. It's just a matter of what word works best for you, okay? So once you notice, for example, you can see where this was the candle right here that broke through this key level. This is very important to us. So now we want to get in on the landing of the candle, but we're on the 4-hour chart. So you don't want to have to wait 4 hours for that retest. You can go down to a smaller time frame, preferably the 1 hour or maybe the 15-minute. I would say the 1 hour as a beginner. Advanced, you can go down to the smaller time frames because you'll see more manipulations on the smaller time frame and more movement. But once you have that break, what I want you to do is to take your vertical line, which is right here. Let me show you guys. Put a star by it. Put it on that candle, and you want to wait for that candle to close, okay? I have my countdown timer on TradingView, and if you right click on it, you can count down to bar close, okay, which is really cool. It'll let you know how much time is left on that candle. So the next step is to go to the 1 hour. And at this point, we want to get in once that candle lands on top, and we need to see rejection, okay? We need to see rejection. So our indication to get in the trade was this one pullback candle right here. Okay, so let me put an arrow here so you guys can see. This was the candle. This was the candle that rejected the key level. You can see, look at that wick. It rejected and it closed above. So now what you want to do is you want to get in on that next candle. So you're going to place your entry on your MetaTrader 4 on your phone. You're going to do most likely either a market execution, okay? And you're going to click a long position and you want to get in on this next candle. And remember, you buy low and sell high. So you don't want to get into a buy up here because remember, your stop loss has to be above the previous low and your key level is up here. Although this is a 1-to-2 ratio, this is a horrible risk, horrible risk to get in a trade right here, okay? What you want to do is once you get that confirmation of that candle close, which you probably should put a timer on your phone for the 1 hour, okay? See where it closed. It closed right here. The buy candle opens right here. So you won't have as much drawdown, okay? And you can put your stop loss below your key level and the wick of the pullback candle, which gives you 26 pips. And then you would use your next level, your key level or market structure as your take profit. Now, this is 119 pips. This is a lot, okay? It's a lot of pips. I'm a swing trader, so I usually go for 50 pips is my minimum. I usually trade about 250 plus pips. However, your goal is, 20 to 30, 20 to 30. If you start consistently getting 20 to 30 and you want to boost it up a little bit, then go ahead. But 20 to 30 is a great way for you to just see that you have consistency. So right there, we got our opportunity to get in the trade. And what's so cool about this entry area that we have, if you look at market structure, the previous high, and you go like this, let's bring it down a little bit, you can see where it basically, it's a little bit below, but it respected for the most part and kept going up. Now, I like 4-hour levels. They're respected well. There are always going to be manipulations in the market. And anytime this happens, you just wait for the candle to come down below or above. Like, for example, you see how there's some slippage below our key level. That's going to happen. Just wait for it to land on top. You got to be patient. Okay, so that's what you're going to do. Now, if you put your stop loss below this low, that's up to you if you want to do that to be on the safe side. It is a higher risk, but there's nothing wrong with doing that as well. It's just going to be a higher risk. So if you are doing $1 per pip, you're essentially saying you're okay with losing $47 to make $119. What you don't want to do is be cheap and say, oh, I'm willing to lose, 7 pips or 10 pips. Don't do that. You're not ready for that yet. Make sure you're utilizing the position calculator. There's a reason why I include that in this course. It's because it's a very handy tool and it will help you with the psychology so you don't lose as much and it doesn't affect you psychologically. Okay, so that's how you're going to enter a trade for a sell. Now, we're going to use these same key levels, okay, because nothing changes here. I'm going to use these same key levels. So let's go back to the 4-hour. And what we can see here, okay, now I normally would not trade a sell in a buy trend, okay? I would not trade a sell in a buy trend unless the previous low is broken and retested, all right? However, a lot of people would take advantage of this. So, matter of fact, I'm gonna go to a sell trend right here. And look at these levels. Look how they were respected now. And this is March 20th. Okay, excuse me, March 9th. And look at how beautifully they're still respected. You will see that your levels will hold. They will hold for a while. So in this case, we can see the market was going up. It was unable to achieve a higher high or a higher low. So what intrigues us, what we're looking for is number one, this low right here to be broken and retested or a key level. And can you guess? This is the candle right here that broke that level. So the next thing we're going to look for is the retest, the pullback, and we need to see it respect this key level. We need to see rejection at that key level. And this is where you're going to really focus on your price action and understanding it. So now we're here on the 4 hour, and you can see each candle is 4 hours. So it took 1, 2, 3, 4. That's 16 hours for that retest to occur. So you want to be patient, set alerts. If you have a paid account, you're able to set alerts. This is something that I do teach in my training, but I'm sure some of you can figure it out. It's not hard. But what you want to do is wait to see if it will respect it and close just like it did here. But in this case, instead of going up, we're looking for it to push down to the next key level. So now we're going to go down to the 1 hour time frame. And let me locate our area. There it is. And bam, you have your retest. And again, it's not going to be perfect, but this is a beautiful sign. And even if you missed it, it gave you another opportunity and retested right below, which is beautiful, you guys. So you're looking now for a short position. So we're going to get our tool. We're going to put it here, okay? And we're going to put our stop loss above the previous high, which is right here, and we're going to take it down to our next key level. So this is basically almost a 1 to 2.5 ratio. All right. You don't have, if you don't want to use the previous high, you can always just go a little bit higher. But I always recommend just going above the previous high minimum, especially if it's not that far. You want to do that just to prevent yourself from being stopped out. Now, once you're in profit for a certain amount of pips, there is a way to trail stop and secure your profits. And again, I want to try to keep this as simple as possible, but I am going to let you know that is something that you can do. And as you can see, and I'm going to measure, I'm going to use our tool right here. From our entry down to our take profit, it took 1 day and 6 hours for 128 pips. So this is not, this is, today, can you wait 24 hours to take profit? That's on you. I say if you can wait 2 weeks for a paycheck, you can wait a day and a couple of hours for you to win some money. Okay. Now, if you were just going for maybe something like right here to this smaller key level, which is right here, if you're looking for smaller pips, then you definitely want to go down to a smaller time frame like the 15-minute, you guys. And bear with me, I have to locate it. Where are you? There we go. Fun stuff. So if you're looking for smaller pips, right, to this new key level that I just drew, you're still going to do the same thing, but your entry, okay? And you're still gonna have your stop loss at least above this high. The thing is, okay, this is a 1 to 2, pretty much, a little bit over 1 to 2, which is not bad. So that's not a bad thing. You, as a beginner, you definitely want to use the previous highs and lows. And as you become more experienced, you'll put it slightly above or below your key levels and have a less risk involved once you become more familiar with trading and back testing, whatever pair it is that you want to work on. So anyway, I want you to give this a shot. See if you can locate areas of entry. Go ahead and put your stop loss. Go ahead and put your take profit. See if you're using proper risk management, and then let me know what you think. Let's see what your entries are looking like. Let's see if you can identify the break and the retest with your key levels. So if it's a buy, your break and your retest needs to go up and then land on top. If it's a sell, your break and your retest needs to go down and land below. So let me give you a visual real quick. Sell needs to come from below, close here, and go down. A buy would need to go up, land on top, and continue going up to the next level of market structure. So where you would enter is going to be, excuse me, y'all. I have my drawing tool on. I apologize. You want to enter at these areas. And remember, they're not going to always pull back to the line perfectly. Sometimes there'll be a little bit of slippage, but if you're able to identify these and you have price action showing you rejection, like look at here, rejection, 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 rejection. After rejecting it, 1, 2, 3, 4, what do you think is going to happen? It's going to go down. It's going to go down. Okay, even right here, this key level, all this rejection right here indicates that there's going to be a pullback. And what happened? It pulled back to the previous market structure. So I don't want to make this too confusing, but let's see if you can get this. If you have any questions, please post in the group. If you haven't done so yet, please subscribe to this video and hit the bell notification so you can stay updated. And if you have any questions, just hit me up, you guys, and I'm looking forward to see how you embrace this information and apply it to your trading journey.